at the end of the day, which it literally is, I'm grateful I slept through the first part of the morning. What a wild ride. I did see a move like this coming though, and I didn't quite describe it correctly. I didn't think that we'd see a pre-market rise, but I was expecting, well, let me show you. I'm gonna go ahead and blow up this sell here, and American Eagle Outfitters did pretty good today too. You can see their pre-market action was more in line with the close yesterday. The price did drop, rise, and then what happened is American Eagle Outfitters rose above a critical level of support and resistance, and it held onto those gains. And you can see the uptrend here did break, and we did have a downtrend, but then the price moved into a completely trendless sideways grind, bouncing several times, once, twice, three, at least 4 times along that support and resistance at 2301 before rallying into the close. Great day for American Eagle Outfitters. Really quickly, I do want to say, I do have 30 shares of American Eagle, and I had a short put long call calendar spread, and I went ahead and just closed out that trade at a profit on both sides to free up some cash so I could buy a put on AMC. Yeah, today I traded puts on AMC and calls. Actually, I rode a call. Well, I woke up and the price was high and I saw what was going on. I bought a call, I made some money on that call on the way up, and then I bought a put and I sold it. I digress. In American Eagle Outfitters, I closed out this short put long call calendar spread, and I actually ended up buying a couple more calls. I bought 5 out of the money calls, which I ended up selling at the end of the day for like a loss of $8. And then I also bought a $19 call, and that is at the money. It breaks even at 23, I think it's 36. So just a couple of cents away from where the price closed today, which is good. I actually am thinking about exercising that call. I'm not looking to make money on it. I'm looking at exercising it. And if I do that, I'll sell the shares that I bought previously with a lower cost basis. And I'll consider that profit to be a discount on the premium that I paid for the call. I don't know. It's good to have profitable trades. I like to make money where I can. So you never know. If the price runs up really high and I expect to retrace, I might just sell the call and hold on to the 30 shares and then buy 70 shares. That might be a good way to balance out my cost basis without having to pay that premium, but nonetheless. So American Eagle Outfitters is really exciting things today. Everyone wants to know about AMC though. Cap, we don't care about American Eagle. Did you know American Eagle has higher short interest than AMC? And that company's making money, a lot of money, like fundamentally way better than AMC. Okay, what do we got? So I'm currently on the default drawings. This shows my daily chart drawings for AMC. You'll see that the price rose in the pre-market and then it fell and found support at the bottom of that gap zone. What I was saying the other day, last couple of videos in AMC, is that I expected to see, I'm gonna show you on the daily chart actually too. I described a couple of different scenarios. The bearish scenario being a rise to that gap zone and a rejection, right? And that would be the double bottom. You're looking for a double or triple bottom setup. The bullish scenario, however, would be to break out and above this gap zone. And I said very specifically, I wouldn't be surprised if I saw a big tall wick. And what I mean by wick is I mean this little portion here at the top of the candle. All right. I'll put an arrow on it too, why not? Here's an arrow. I was expecting that to be really tall. And what I was trying to say there is I was trying to say I would expect the price to run and rise up, but then fall. And then I said very specifically that the price would need to close above the gap zone to be bullish. So this wick playing out and closing below the top of the gap zone, per my previous analysis, is actually bearish, right? This is not a bullish move. A bullish move would have been to see this run up and close above the area, but to see it push up, and in fact, it didn't even push up, did it? The price started up here. It started up here. So the real question is it worse to have a pre-market run than it is a normal market hour run? And I think the answer is yes, because now we have this big red candle. This is an absolute rejection of a breakout. Like, the price didn't even have a chance to rebound, and you saw that in the daily price, the 1 minute chart, that the price could not hold that level at all, despite the big buying volume that we saw early in the AM. So what's that mean? It means we are forming now a high volume double top. All right, a high volume double top. That's what that means. This is more likely a bearish scenario than a bullish one. Okay, so moving forward, I'm going to be looking for the price to continue to fall. And once the price passes the low, the lowest low we've seen in a long time, below 1340, this double top could play out to reach a target, and that would be a really bearish target. If the pattern confirms, I'll chart it and then put a price target down. But yeah, having that pre-market run was really bad, really bad. Let me zoom in and let's have a look at what the 1 minute looked like. So here you go. You have the price starting super high, and early on, there was a warning sign right here that 1.8 million volume did not move the price more than $1, which it should have, right? Let's see here. What was our low? 1769 with a high of 1826, less than $1, right? This was a big amount of volume to not push the price very far. And look at how bearish that candle looks. Super tall wick, all right? And sure enough, the next candle fits almost within that trading range, and we see a dump. All right, so the price opened really high. It opened high enough to cause selling, profit taking, okay? And that started a downtrend, which the shorts inevitably began right about here. It would not surprise me, not in the slightest. So now we've had a bearish open, 1, 2, and 3, into this gap zone where there was a lot of capture here. This is a lot of support. Undoubtedly, there was a lot of enthusiasm to see the price as high as it was in the morning. And then the price slowly trickled up. And I think when the price is rising on this low volume, relatively low volume, that this is actually the action of bears. These are shorts that are covering, they're closing to prepare for the next big move down. I think that this could be bears playing options contracts, right? This could be a lot of different things that would cause the price to rise as those bearish positions are closed, as the bears take profits. I was not holding a position in AMC when the price opened today. So, but yeah, I know that when I'm closing out my bearish positions that I'm introducing bullish action into the market. So that's why I think it causes these low volume runs, is profit taking by bears. And then we saw this magnificent topping pattern. It looks if this were to occur on a daily chart, I would say that's a picture perfect head and shoulders top. But on the 1 minute time frame, I'm just going to call it a topping pattern. And this rejection was really interesting because it happened on, let me show you the what is that? That is like a perfect touch and wick through whatever that line is, right? Let me show you what this line is. That line is a downward channel that the price has broken out of, and the last time it touched it, the price tanked, all right? And then we got these pipe tops on the 4 hour, the price tanked. And now once again, 4 hour touches that line and it's starting to tank. Now, I mean, a double bottom, I don't know, the difference between the lows of these two candles is pretty high. The low here was at 1340, was it? The low was 1340, yeah, and the low here was 1423. So that's a pretty big disparity for a double bottom. I think instead what we're seeing, and I'll show this here, and if the pattern confirms, maybe I'll chart it later. You just connect some downtrends. Let me make this a different color so it's more visible. We have one touch point here, 2 touch points. This is not quite a third, a fourth, and a fifth. I think that we're in a descending broadening formation at the moment. But what I'm trying to illustrate here is that the price has been in this powerful downward channel for a long time. In fact, the pattern actually starts way back here in late August, early September, and you can see these pink touch points. Those are the touch points that established this channel. And since then, the price has been moving in context with this channel. This is the correct downward channel, I believe. I know Benzinga recently posted a downward channel, but I don't like that guy's charts. All right, you can see there was a breakout of this channel and now the price is falling further. So yeah, for the price to touch that level and not move through it, but rather reject, look at that, rejection. Like, that is bearish to close below that line. This could be recovered tomorrow, right? Moving up into the channel again could prove to be a bullish thing. Nothing says that cannot happen. However, given the prevailing trend, I really don't think it's that likely. I think we saw a lot of optimism today, much like we saw in the middle of the big downtrend, right? Back here, you can see these volume spikes. Boom, boom, boom. And it was during this time that I was taking a lot of heat for being very bearish. And it was hard to maintain that bearish stance when you had these big fat green candles. 144 million volume that day, and the price was up 5%, you know? And then look at today, right? What's today? 124 million volume, and the price is up 5%. It's the same, right? And when this top happened, we had a couple more days that were green, and that's what I was saying in my last video. There could be a series of green days leading us to a level of resistance before we see a downtrend again. This is what I had in mind. And you can see this topping pattern, and I called this top. I said, I'll be damned if that's not a topping pattern. And the price broke down. So when I see this big move like this, I'm very skeptical of it. Very skeptical of it. Especially when you look at the 1 minute chart. That's not a bullish day. That doesn't look like a bull run, you know? If you watch my intro, that background, I basically just screen grabbed the May 27th run, and then I picked out the coolest portion. I thought, these charts do not look the same. So, God, just touched it and fell to pieces. And I'm gonna tell you what, I bought a call, I think it was back, let's see, I'll recognize the volume. It was the second time the volume spiked really high, right there. This is when I entered a call. And then, let's see here. Let me turn on my drawings and I'll have a better idea. Okay, right. So I entered that call. It wasn't the best spot, but it was a good spot. Was it? It must have been here. It must have been at these volume spikes. I entered that call. And then I probably got out of it. Oh God, I remember. I don't remember. It was probably right here, but I only held it for like an hour. And I was in and out of that call really quickly because I woke up late, you know? I was kind of like panicking. I don't like to trade while I'm panicking, but as soon as I drew those trend lines, you know, this being the primary trend, right? And when the price clearly established this accelerating uptrend, and I saw these continuous volume spikes and the implied volatility started to rise, I knew that there was going to be some green action to play, so I did. And then I held, I didn't hold any positions, I think, through here until the trend broke. And right there, I entered into a $27 put. It was the first put that had $1 of delta and 0 theta and vega. So essentially, because I have a cash account, I can't short, right? If you go long or if you sell short, you have a delta of 1 with 0 theta and vega, right? And so basically what I do is, because I can't short, I have to buy puts, right? So I buy a deep in the money put that has, you know, a delta of 1 and 0 theta and vega, and I'm good to go. And, you know, of course, no gamma. But yeah, so I entered that put there, and the price found some horizontal support here, which wasn't too surprising, and then the price fell down and it tested the breakout price right there, that being the breakout, and then started to move down. And as soon as this bearish volume came in here, I was feeling pretty safe. When you get these prolonged sell-offs, I mean, it's a couple of minutes of volume being over that 30-minute average, and the RSI starts to reach the oversold region, this is when you know it's going to get bearish, when the price and the RSI are falling, right? This definitely, look at this, it's like 1-to-1, so bearish. And then the RSI comes up, cannot rise above 50 before being thrown back down, and wow, just spending a lot of time right here in the oversold area. And so I held on, And I held on, and I manually maintained a trailing stop, and the price continued to fall, and I got out somewhere over here as the price pushed through this downtrend. And I was watching American Eagle Outfitters start to move, and I was thinking that AMC probably would too. And it did a little bit, but I mean, what's important is I got out before right here. It didn't really matter because it's only a few cents. But yeah, so whew, I played a call today and a put, which worked out great because look at that mountain. Do you know what a bearish reversal looks like? This is what a bearish reversal looks like. The price goes up and then it goes down. It looks like that. And I was thinking we'd see the whole run during the day, and we didn't, so that's why it didn't form this nice daily candle wick. But yeah, tomorrow's going to be really important for AMC, especially if you're a bull. There is a high chance that the price just continues to dump. It can happen. I have no doubt. This was a great run today, moving higher, but as you can see, if you bought in, if you went long, you know, unless you bought down here and you're down money, right? Worse if you held calls. So it's just looking bearish to me. I can go ahead and turn on the extended hours. Yeah, that doesn't that look like a double top? Like on the 1 minute time frame, those prices are pretty close. Now, the double top would really confirm when the price moves below this point. So going into tomorrow, moving down below today's intraday low, around 1650 would be, whew, that'd be a very bearish omen. I'm going to continue to watch this level 1622 because there'll be support there as well. So that's what I'm going to be watching for moving into tomorrow with AMC. God, I'm talking so much. That's what happens when I'm late and I just have a lot of thoughts. And it was a wild day today. If I'm gonna make a long video, it's gonna be today, right? That just makes so much sense to me. Although I do know that we ordered some food that should be here soon. Oh, get this! I also want to share something about. Okay, so I get these emails from my the people that have my mortgage from the bank, and they're like, your estimated home value has increased $43,606 this month. The home's estimated value is $372,000. All right, so I bought this home in 2019. It's a condo. It's just like a little thing. It's an apartment, you know. It's an apartment, and I'm up 67% on that investment. And it's the most money I've made anywhere. I haven't refinanced, I don't plan to, and I don't plan on selling and moving, but like my point is who could afford to buy a house anymore? Like I would, if I didn't get in when I did, like I would have totally missed out on the opportunity to own my home, which I don't because I have a mortgage, but I have the rights to my home. Yeah, so it's just crazy to me. And I actually saved up money buying gold and silver, and I sold it all to buy the house, right? I went from one asset class to the other. So that's kind of a cool story about my history and my investment history and whatnot. What am I going to pull up next? I should look at GameStop, right? Oh, yeah, okay. What is this? This looks bullish. This is bullish. Here I have a downsloping trend line. I don't really recognize it anymore. But we did see the price push up, touch, and come higher. And this is bullish, and it closed above it. This is bullish. Let me go back to AMC because I didn't address trend line study. Ah, there it is. Okay, this is bullish though. This is bullish to see the price close above that trend. It's around the 15-minute. Okay. Not terrible, right? I am saying that it is bullish to see the price move above a couple of these trend lines. This one is an internal trend line, the yellow. I'm just gonna push it through here. Yeah, there we go. That's a great alignment for that line, is it not? So you can see that in the past, the price has been above this trend line. And, well, it didn't mean too much. you can see that the price likes to hug. This is a great trend line. This is a great internal trend line. Just analyzing it, inspecting it. I just adjusted it a little bit. Perfect. And then today it gapped above, and it's on it. It's riding it as support. Okay. That means the pre-market's really important tomorrow morning. If the price opens below this internal trend line, you can expect a fall below this red one. I mean, there might be some support here on this red trend line, but how far is it? 1689, 1598. So if AMC drops $1 tomorrow, it'll be back below these trend lines. I think it's going to be important to watch these levels more than anything else. And going into tomorrow, we could get a really clear signal. What do I want to do? I want to back out a little bit because I just want to. Ooh, that would be food. I just want to, establish that this is the primary downtrend right here, the prevailing trend. This big red line. This is it, and the price is still pretty far away from it. And having reached it before in the past has proven to be bearish and sent the price much, much lower. So this is a lot of volume, but so were these days. It's a comparable move, right? And what did implied volatility do? Let's go look at the daily. It ticked up. Oh, that's good. That's bullish too. That's bullish too. Very interesting. So I didn't look at the RSI. I was expecting the RSI to kind of bounce off the 30 level, and we closed today at 32. A red day tomorrow, pushing the RSI back into oversold is going to be bad for the price. I don't think that I'm bullish until the price really pushes past 20. Yeah, if the price can push past 20, I'll say, hey, that's a trend reversal. Bolkowski says you need a 20% run before trend reversal officially. I don't know if this is 20%. 1340 to what's this high? 18, like $5. Like that, yeah, that would be trend reversal. Yeah, but this is a red day. So there is a internal trend line here that I've drawn, right? I'm gonna go ahead and expand this. Whoops! Not that. This. I'm gonna be very careful here. 1, 2, 3 perfect touches. And the price closed below it. Okay, this is bearish. This is bearish. Interesting. Was today bullish? My final verdict is no. And moving forward, I'm sure the price will run a few dollars now because I've said that. It's okay though. The analysis here is very washed in the short to near term. And so it's going to be okay to have some uncertainty, but I expect more downside. That's the prevailing trend. And the technical analysis will always support the current trend until a reversal is set. And really, I just feel bearish. That's what my gut tells me too. Don't look back now, but this might be another halfway point. Yikes. Okay, I'm gonna go. Sorry if my webcam's lagging.